Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for United Health stock. And this stock has had a rough year. There's been a bunch of drama with this company during 2025. We don't need to go through all of it. The main focus here is just to talk about the earnings and the outlook and what my price prediction is for this stock. So, for 2025, we have a GAAP expected EPS of about $15 and then a non-GAAP EPS expected to be a little bit over $16. Okay. So that's an important part of this. And if we look at the history of the stock's valuation, you can see that right now we're at about 17 times earnings, right? Which historically is incredibly cheap. Okay. It hit this valuation in 2020, but most of the time it's normally trading around a 21 to like a 23, okay, somewhere in that range. So we have that. So we have there's definitely a lot more room for this to run here as far as valuation goes. I think looking at how fast they're growing is a big part of it. So like they're expected to grow. So EPS is of course expected to have a huge drop this year, okay, which I think they're very capable of getting back to those sort of numbers. Going into next year, we're only looking at it going from a little over 16 to close to an 18. But I think in the years to come, we will see it get back to $25 of EPS and probably $30 of EPS too. Right? It might take a couple of years, but I think we will get there. So we have that part of it. Then if we come over here, you can see forward PE. On a forward PE basis, we're looking at 20 times forward earnings, which it looks like a lot more than where it's been in the past. But I still think this valuation is cheap. You look at a trailing basis, you can see this stock traded at over 30 times earnings on a trailing basis, right? Which I think that was 2024. So that would have been, yeah, 2024 had this huge spike. I don't think that's super realistic. I don't know why it would trade up to that valuation. I think it's more comfortable in the 20 to 25 range. So that's probably where it'll go. Here's the last 5, 6 years of the market cap. As you can see, we this year we traded down to a market cap we haven't seen in over 5 years, and that's another reason why I think this stock is going to have a big comeback. It already has come back a lot since I think I only bought one or two shares at $250 a share when it dropped because I kind of just wanted to watch the stock. I wasn't super confident in it because I didn't know a lot about it, which I could have made that position bigger and I probably would have made a good amount of money by now. But either way, I just wanted to keep an eye on it, and I wasn't, super confident at the time. But with that being said, even if you were considering buying it now, although it's not as good of a buy as it was at 250, I think there is some potential to make some money. I think the stock will be probably over $400 a share, like within like a year. Honestly, that's kind of where I see this. So right now the stock's at 330. I say the stock will be over at least 400 within a year. That's the way I'm looking at this. So what's the next thing? The other big news here is that for the past 6 months, United Health Group was the number one bought stock by super investors. 22 purchases, 22 different super investors bought the stock. That's crazy, right? That's a lot. We come over here and we're looking at the revenue growth has been solid, right? So that's not a problem. As you can see here, they're still growing around 10% a year. However, the analysis over here does say that sales are expected to drop to only 2% growth in 2026. That doesn't look too good. But, hopefully they could either beat that number or hopefully it's just a temporary thing. And even with those numbers, though, if they're doing over 400 billion, 450 billion of revenue, well, then they could still get back to 25 or $30 of EPS because they already had done that in the past. So it's really just a profitability thing. Let's go back over here. I want to come down. So see, net income is where we're struggling. Net income, free cash flow is not strong. EPS is not good. Cash to debt is not good. 72 billion in debt, only 30 in cash. That's not good. Dividends are consistently rising, but that doesn't even, I mean, they should focus on the profitability, I would think, first. Shares outstanding, they are buying back a little bit of shares, so I guess that's helping. And what else do we have over here? The big thing, I just want to see free cash flow and net income. I want to see those numbers get better. And so I think net income is slowly going to recover, and we'll probably see it get back to over $20 billion again. It might take a year or two, but I think it can happen. So we have that, and I think it really just comes down to the fact that when you look at the numbers they're going to do, they're most likely going to go back to higher net income, higher EPS, and then that valuation, right? The valuation is going to be it should trade at least well over 20 times earnings. It could probably stay even close to 25, honestly. But if we take something in the middle, let's say we take 23 and we multiply that times the $18 EPS, let's say they're going to do next year, then we're looking at a $414 stock. So there's not a ton of money to be made. That's like what I was saying. The risk to reward is not great here. It was great at 250. I have to say at 250 it was a deal. I should have bought more. But over $300 a share, I think you can make some money here. I just don't think it's a lot. I think there's if you look at my other stock picks for this time we're in right now, I think the other picks are much better. So that is my analysis for UNH. Let me know what you guys think down below.